Hello.
Hey.
Hey. Welcome to Crypto Talks again and our weekly podcast. I don't know why I'm talking like this, but I'm doing it anyway. All right. So we're back again. Hopefully we will be back next week. If not, we will. We apologize for not doing any videos or anything this week, but we have had a bunch of stuff to do. So it's all fine. Yeah. But on Monday, we're going to be back again and do the weekly Monday TA video thing. But for today, I'm joined by Rob.
Hey.
Well, actually, it's that side. There you are. So we're actually going to be looking at some questions that we received during the week from members of the Discord. And one of the things that was asked a few times, I believe several people, was kind of what do we look for in crypto projects before we, when we're researching them, before we actually, decide whether or not we want to buy into it or not, or invest in it. I know Rob and I, we do things differently.
That's a bit of an understatement.
No, but we do things the same way most of the time, but it's like at the end, I tend to get into, I only have a handful of investments, and I know Rob is more of a, he's more a
scattergun.
Yeah, he's like a shotgun, and I'm like,
sniper rifle.
Sniper rifle. Yeah, that's actually pretty cool. Okay, but yes, so there are a few things that we want to go over, and I was thinking I would start with something that we have, I think, touched on before in other pods, which is daily active users or daily active addresses. And the reason for me to why I like this metric as one of the first ones I look into after looking at tokenomics and team and all these things is, are people actually using this chain? For example, Ethereum obviously was the first big L1, right? That did, well, not the first big L1, but the first one with smart contracts and so forth and so on. And, watching other similar chains come online and do their thing, you can tell if people are actually using it or not. Because with users comes adoption. Well, that is adoption, plainly simple, So for me, looking at daily active users, you can't go wrong with looking at it, as long as you understand a few points of it. Number one, daily active users does not mean, or daily active addresses is what you're looking at, because daily active users, that would be individual people, but you can't have those metrics on chain because you just can't. How do you know? Like, I personally have several ETH wallet addresses, and I have several Solana wallet addresses. Rob, I think you have several too.
I have several everything addresses.
And that's just the way it works. However, you can still see the addresses, daily active addresses. Okay, I need to lower the music. I'm lowering the music. In the recordings, I can't even hear it myself, so I'm like, I've lowered it. There we go. But yes, so let's have a look at what this looks like when you put it on the screen. Here you go. So what did I just do? Okay, I guess I broke it right away. That's awesome. There we go. I found it. Okay, so this is on Santiment.net. These guys do a lot of on-chain metrics. They have a whole bunch of different things here. Inside you can see circulating supply and transaction count, payment count, daily active addresses. You can add all these things to a chart, and you can compare different L1s and different crypto projects and all these things. So on this one, I've actually added daily active addresses on Ethereum on a 7-day moving average. The same thing for XRP, Matic, and Cardano. These are the four ones that I could find on Sentiment. They don't have everything, unfortunately. I had Bitcoin on here just as a comparison, but you could barely see these ones because Bitcoin has so much more daily active users or daily active addresses than everyone else. All the other ones get compressed down into just a straight line at the bottom.
Is it easy to put it on just for a second? Because I would be interested to see that.
Yes, it is. So I can just go here. I am on Bitcoin. Here you can pick whatever you want to look at. And if it has the metric, you will find it a bit down here. You got daily active addresses. You click on it, you add it, and then you can open it. And then I have to change this into an indicator, 7-day moving average. And there we go. We have a line.
Okay. Yeah. So
you can see how Bitcoin has a lot more than the others.
That's very interesting.
Yes.
Because I wouldn't say that technical analysis on charts on things like this isn't anywhere near an exact science, but for sure you can see recognize the same trends, and the level of how flat that line is for daily active users. In the whole, for most of these coins, to be honest, like this, they are declining, but they are holding up relatively well, and this has clearly been a step wave of adoption, and that baseline adoption is now here to stay.
Yes.
So yeah.
So
it's good news. It is. There's light at the end of the tunnel.
It's unfortunately on Sentiment you can't actually make any trend lines or anything, but obviously
you can see the
pretty
uptrend.
Much a 45-degree angle for Bitcoin. But I will remove the Bitcoin one so we can just see these ones, and I'm going to shorten this just down here so we get a clearer view. Okay, so first of all, let's compare these just real quick. Like I said, we have Ethereum on the blue line. We have XRP on the pink line. We have Matic on the green yellow line, and the teal line is Cardano. They don't have Solana on here. They don't have Avalanche on this. They do have BNB, but I don't know if those numbers are correct because I think BNB is BCS, and it appeared. I think they have a lot of users on the BNB chain, right?
On the smart chain. The smart chain now is the main.
that has a lot of users. However, on Sentiment it showed like 3,000 people. And I don't think that's correct because I think it's because it was a split chain before. So I think the metric is still kind of measuring the old chain that they're not really using anymore or something like that. Either way.
It's not valuable.
Yeah, exactly. However, so let's look at this and say, okay, so Ethereum is obviously the big bad boy here. The big scary monster that everybody actually is trying to catch up to. And I don't know if it's visible for everybody, but right here you can see how many they do have, and it's 402,000 daily active users on average, on a 7-day moving average. For Matic, you have 174,000. Let's see, for Cardano, we have 63.4 thousand, and for XRP, we have 41.4 thousand, right? And with this, you can kind of say, okay, Ethereum is obviously the big boy. You can see the trend on Matic is going up, and they already have more users than XRP. They have more than Cardano, and I think we can all agree that there's a lot of talk about Cardano. Personally, I'm not sure why. In terms of how. Wait, hold on. There we go. I don't really see the why I would get into Cardano here when you have so many more people using Polygon, for example. And the reason to why people want to use a chain is because of all the applications that are built on it, right? And and more users usually translates to better applications that are built on the chain, because people want to use them and they need to use the chain to use those applications, which is why Ethereum has so many more than everybody else. However, I want to just hop on to, because I did find Solana's metrics here on the block, It looks a bit different, but it is the same thing. Number of active addresses on the Solana network daily, 7-day moving average, right? And right now it's sitting at 525,000, which would put it right here at current numbers compared to everybody else, which is more than Ethereum. And this is one of the reasons to why I buy Solana as a hedge against Ethereum. I still have Ethereum, I still have Polygon, and I have Solana. So this is one of the things that I look for, and the reason for it is for understanding what type of adoption there is. And also, hi John and hi Jay. See you in the chat there. Spam us with questions, guys. It'll be fun.
Oh, John's going to give us 14 questions now, and
one question at a time, fellas. No, just spam away, and I'll pick the ones that we like. But yeah, so the shocking part for me here, when you're looking at adoption, is that, for example, XRP has been around since what is it?
2015 or earlier, so 2013 maybe.
2013. Right? We can actually look because it's the oldest one of these chains. 2013. You can see how it's getting a small usage here with about 7,000 people. But it's been around and it's not really being used that much. In the later, when everyone else exploded up, XRP followed the trend here, but came down again, just like everything else did, except for like the only thing that's not really downtrending since May of 2021, or since when we're still in a bull run or a topping.
Yeah.
Polygon is the only one who's still trending upwards compared to the other ones, and I believe that Solana even was trending down.
Yes,
wait, 2021. Yeah. Well, yeah, the trend is kind of. This is the thing that I don't like this way of looking at it, because you can't really. But you can at least put an average on this by just looking at it, and I think the average users are somewhere around this line here. Somewhere around here, and that's almost 700,000 people using Solana's chain.
Does this chart include all of the validated transactions, though?
Well, this is not.
If that's active addresses,
address, it's active addresses.
How many of those addresses are?
I am unsure. We can probably look at the number of unique addresses that sign transactions across Solana. And that's basically what it is. And I believe that that's the same thing for all these other metrics too. So for validations and stuff on other chains, it's the same thing. So they all give you the same numbers. And I can tell you this: I had an argument with not an argument. I had a discussion with a guy that is very much into Ethereum a while back, and he said that a lot of the transactions on Solana or other chains might be, bots doing trades and whatever. I'm like, well, you can apply that argument to every chain. So it's a redundant argument because it's applicable to all of the chains, right? Yeah. So you got to keep that in mind too when you're researching these things, and you're seeing, maybe you're doing research and you're looking at articles and you're reading stuff and you're seeing, this and this is happening on this chain. Well, you got to keep in mind these things, most of these things can happen on every chain, unless it's like a chain specific technology, like I don't even know. It could be anything. But you know what I mean.
Generally, it's signing transactions using a coding language to deploy them. So it's the app itself is just a program. It's built. The only blockchain thing is the interaction with the chain, which is specific. But yeah, any application should be able to be built on pretty much any chain. So it does make sense to choose the optimal chain.
Yeah, precisely. And we did get some questions here. I'm gonna quick respond to these. Okay. So first one from Dave.
There's a few more above that.
Will people still buy dog coins? Yes.
Yes.
Will I eat pizza today? Maybe. And will Binance survive the next bear market?
Yes.
Yes. I mean, most likely.
Unless they're pulling an FTX, they will survive. If they are pulling an FTX, we are so utterly screwed that Yeah, like that would be a tough time. That would be a time to have some cash ready. So without knowing the future and without knowing their internal business plans, yes, they should survive perfectly fine and thrive, and they will continue to consolidate the market. And if you look at what's happened, and you've seen all of the dominoes that have fallen over the last 12 months, and Binance are still there. They're still the leaders in the market. They're still the most used. They've got a huge supply of BUSD. They've got a huge supply of their own coins. Obviously, that's not necessarily the asset value that they say it is, and that is a weak spot that could be exploited if Binance are decided to overexpose themselves. Will it happen? I would hope not, because it's not that difficult to simply exercise an appropriate level of risk management to be able to not completely destroy your own company by degen trading shitcoins into the ground. You don't have to do that. So if Binance are doing that, they may pay the penalty. If Binance are above board, we good?
Yes. Yes. I would say so. And let's see. I'm trying to get Jay to specify a little bit what he means. He asked, "What does the let me pull this up. What does the data say about the top 3 tokens and coins? Like, which one are the best according to the data?" And I said, "Which data?" And he wants to know all of the data. Unfortunately, Jay, if we were to look at all of the data for all of these, it takes quite some time to put that together. However, we are looking at we started, and Jay is actually part of this, researching. We're starting to do a research paper that we will hopefully release at some point. But instead of looking at what is the best chain to invest in as an investor or a user, we looked at what is the best chain to build your project. So instead of looking at data that is relevant for an investor, we're looking at data that is relevant to developers and builders and project managers and stuff like that. And we have put together some of it. We haven't written down any conclusions on it yet or anything.
No.
But it should be available on Patreon whenever it's released, and we will announce when we will probably go over it just briefly on the podcast as well when it's done. But that one is going to be a big one. That's a 50-pager probably once we're done with it.
Don't say that.
It's okay for me to say that because I know you're going to write it for me.
Right.
You're gonna be the man who makes the text on it.
That's I think I'll be putting my Chat GPT hat on for that one. I ain't writing 50 pages if I don't have to. No, it'll be.
It's mostly pictures. Don't worry.
Oh, I'd like pictures.
Yeah, it has to be pictures because we need to put up stuff like this to show that we actually did the research.
So yeah, Jay, to follow up, what does that type of information tell you in layman's terms? Essentially, network growth. What you want to see is you want to see money and people flowing into these ecosystems. You want to see the number of dApps increasing. You want to see high quality dApps. You don't want there is going to be a huge market for crappy mobile games that people will pay stupid amounts of money for, and that will be one. That drives users in, whether it's like it drives money, it drives value. It could be a ridiculous app, but if it's used, then it will have an impact on the ecosystem. It could also be much more grown up things. You've got the likes of, say, Aave Compound, these lending protocols on not just Ethereum now, but moving on to these other layer 2s, and you'll be able to see the amount of capital allocated in those pools. So like the Aave liquidity pool that you can lend and borrow from, if that's growing on Polygon and shrinking on Ethereum, then that is a sign that ERC20 users, they can use the same protocol. They still it's still Aave, it's the same program, but they would rather use it on Polygon than Ethereum. because the gas fees are much more restrictive. And that money, that capital flowing in, those people who have money locked up on that platform, they're now Matic holders for life. They will use Matic, they will use the platform. And inevitably, as that grows up and the amount of money that is on the platform develops and continues to grow, if you think about it, do you want $100 billion of capital sat locked on a platform that only has a market cap of 10 billion? Say Polygon has a market cap of 10 billion. Could it support $100 billion worth of stuff built on it? That's an inherent security risk. It provides an incentive to attack the platform. So the actual the price of the token almost does have to appreciate to kind of maintain that size and that stability.
Yeah.
So you'd want to see those metrics grow essentially, and how they're growing over time and how they grow relative to market cap. Because for Ethereum to do a 5 or a 10x from here, you're talking about Ethereum with a $2 trillion market cap. Now, Polygon, which is much lower market cap. Let's just take a quick look.
Yeah, I can share your screen if you want.
Yeah, there you go. So yeah, Polygon, $11 billion.
Dark mode, Rob. Come on.
I don't on this now. I
Top
do
right.
on there. But there you go.
Oh,
but meanwhile, Ethereum, 193 billion. So what's more likely, ETH at 2 trillion or Matic at 100 billion in 5, 7, 8 years time, where that's a much more reasonable target in terms of price. If you're looking, if price is obviously the aim of the game, which if you're a trader, if you're an investor, it is, then looking for where those returns are. These are the kind of things you can look at to see where the returns are. What makes a project undervalued? Something that's usage and its utility is not represented by its price relative to its peers. Yeah, that's you see that asymmetric valuation.
Yep, precisely. And it's not only like we said with the daily active addresses and all these things. There are many other metrics too. Like you can look at stuff like developers, how many developers are active on the chain, and all these things, and that just tells you how much the breadth of dApps or applications that are being built on there. Like usually for me, I think of a layer 1 like Ethereum or say a layer 2 as well, like Polygon or Solana or Avalanche. I think of them as, let's see if I can put this in smart words without sounding stupid. It's like, for example, for Solana, you need the Sol token or the Sol coin to use the Solana ecosystem. The same way you need an Apple phone, an iPhone, to use Apple's App Store to get the applications, right? To use them, you need to buy the phone. Apple is not really selling the phone as a phone. Yeah, they're saying, oh, we're updating the phone a little bit here and there, right? But what people really want is the applications they can use on the phone.
Access to the ecosystem, yeah.
Exactly, access to the ecosystem. So that's the same way. So when you see, adoption and users going up, steadily up, or right now we're in a bear market, right? We're in a it's kind of crap, all of it. And Ethereum, everything on these metrics that I had here, all of these, you can see how Ethereum is losing some users, which is fine, yeah, because it's still the big daddy. You see how the other chains, XRP and what was it?
Cardano.
They're losing people, but it's stagnated now, right? So, right, but Polygon is going up. Meanwhile, at the same time, Solana has been losing some users as well, but it's still around their average over the course of a few years. So
see, the thing to think
it's still
here,
more than Ethereum, which is kind of crazy to me, actually.
But the thing to think here, and it's like, I know people think Cardano's been around a while, and but it launched right before the peak of the last bull run.
Yeah.
So this was essentially its first proper bull market, and you know, it had so where its growth trajectory is from. It's although it had a peak, it then just came and reverted back to the mean, and it still had a big growth phase. And when the next bull run comes around, Cardano might be something that just does either holds value or continues to bleed value to the point where it is so cheap that actually it's now very cost effective to operate, and to say, okay, this is now a good investment. This is now worth taking a punt on.
Yeah.
But it's for now, no, it's still it's something to watch over months, not over days. And
yeah.
These metrics aren't just going to pop up and say, the metrics should lead the price. Really, you should start to see that increase in adoption before you see the price really start to follow.
Yeah,
hopefully.
Yeah, hopefully. And it doesn't, just because the project grows with, let's say Ethereum goes to 1 million users, it's topped out at 642,000. This is average. Remember, average. If it was just a day, it could have come up to a million, maybe. But if you don't smoothen out the average, like the users' average, you're just gonna have a bunch of peaks and valleys all over the place. So I could have pulled it. The only reason why I put this on a 7-day moving average is because the Solana one up here I couldn't change. So I wanted it to be the same here. But normally I would smoothen it out even more to 30 days, and I could see a more smooth kind of trajectory up. And while you're looking at these metrics, where you're looking at, okay, how many users are there? At this point, you can kind of see, okay, from these ones here, the ones that pique my interest is obviously Ethereum, because it's the older big brother. It's been around for a long time. It has a lot of like loyal users to it. And Polygon for being a growing ecosystem during a bear market, and then Solana for having the most users. That's the three ones that catches my attention on these. So what I do after that is I kind of go on their official websites. I go on, Ethereum's official website. I go on to Polygon's official one, and I start looking through the different applications, and I start reading about the project a bit more, and just understanding, why are people actually using this? Is it because it's fast? Is it because there are big brands building cool stuff on there, and all these things? And from there, you kind of just end up, reading everything you find, basically.
Yeah.
And I might have to go and move my cat, so because he's screaming, and I'm not sure if you can hear him. But Rob, I can
No
give you a question, because you're good at this stuff here.
Go for it.
Wrong one. Hold on.
Put my screen on as well, then.
Yeah, let me star this one. Here, John had a good one.
Which second layers has the largest app presence? That's not a question I know off the top of my head. I guess without really looking. Polygon has had an awful lot of partnerships, big name partnerships. Who have some of the names that Polygon have partnered with recently? There's
so Polygon. I can tell you the answer to this question is Polygon, because it was basically one of the first L1s, and it has that early
L2s.
L2s. It was
L2.
the early adopter kind of
first mover advantage.
First mover advantage. Thank you. That's the word I was looking for.
Yeah.
Polygon, if you go on their website and look at the website, I believe last time I looked, they had about 1,000 applications on there. And don't quote me on that, though. It was a while back. I looked at that. I already made up my mind to invest in it personally after looking at all those metrics. But Polygon is the biggest one. And I saw a video by another YouTuber who talked about tokenomics and all kinds of different things on different chains. And he dug really deep into some of the L2s that are out there for Ethereum and for other chains. And Polygon has, the other ones look like it's kind of embarrassing to look at in comparison with tokenomics and all these things. I think there was one chain that had the users of that chain, or the investor, had to absorb 21,000% of sell pressure during 2023 to even stay plus minus zero during the year, which is some crazy stuff. And we can.
That's not going to.
That's
happen.
not going to work. But we can go over those things too. That's a video we would have to prepare pretty heavily to go over those type of metrics and really look into it. We can do that for sure. But that's nothing we can actually dig into now because we don't want to just say random stuff. We want to make sure that we're actually
it's something to go away and have a think. But we will come back to that one a bit more lengthy.
For sure. And then we had a question from Jay as well again. What are your thoughts on using stock market data in conjunction to crypto market data to find possible investment or long-term asset to hold? Well, I mean, if you're into crypto and if you're into investing, well, let's say you're into crypto, let's say you're into Bitcoin, right? You love Bitcoin, you want to invest in Bitcoin. That's great. If you only look at Bitcoin and nothing else, with it being Bitcoin, you should be fine long-term, maybe. But if you're only looking at like buying now and selling again in the next week or month, and this is why you need to know what your time preference is. What is your horizon? How long do you want to buy or hold what you bought? And when do you want to sell it? Or do you even want to sell it? What is your plan? Figure that out first of all. But if, let's say you're a guy that wants to buy something and then you're basically thinking, I'm gonna hold this for a couple of weeks and then sell it off when it's at the price where I want it to be.
Yeah.
If you're only looking at Bitcoin at that point, you're in deep water because Bitcoin kind of follows the rest of the market, just like the rest of the market does. So having a broad understanding of like what is the S&P 500 doing, what is the Nasdaq doing, what is the current global financial situation, all these things, it's important to at least have a basic understanding of it. So I would say using stock market data is, you kind of have to, depending on your time preference, right? If you're going to day trade Bitcoin, whatever, right?
Yeah.
You just do TA and you're fine.
And don't do it on FOMC meeting days.
yeah. Don't do it on FOM meetings days.
That's called a day off.
Yeah, that's called a day off, exactly. Like I said, time preference. Figure out what your time preference is. Like if you're looking at Bitcoin, or you're looking at Bitcoin to buy it now and sell it tomorrow, or today, or next week, or in 5 years. If you're looking at buying Bitcoin now and selling it in 5 or 10 years, then you probably don't really care exactly what the price is right now. Like if it's 21K or 23K, it doesn't really matter, right? So yes, that's the response I have for that. Maybe you have a better one, Rob.
I don't know if I have a better one really. I think it makes sense. I think that yes, the markets are correlated. Markets are increasingly correlated because basically the financial system now is so automated and ran by bots that there's no arbitrage to take from there's no mispricing of anything. Everything is priced according to risk management data and tools and technicals and for your earnings being missed, and there's a whole host of things that mean markets will move, and every market has a connection to every other market because you've got a stock market to dollar pair, and you've got a dollar to a euro pair, and you've got a euro to Bitcoin pair, and all of the other ones in between. You've got a Bitcoin to Ethereum pair, and you've got an Ethereum to Polygon pair, and so every time one of these market moves, these markets are not separate. These markets are interconnected. So every time you move one, it moves the whole chain. All that will happen across the whole financial system all the time. And although markets can move in a secular basis, so they can do things that Bitcoin could go on a huge bull run, short-term bull run now, while the rest of the traditional market stayed stagnant. It would still follow the overall patterns. So if the stock market had a drop, Bitcoin would also have a drop, but then it would continue its bull run because it's having a sort of genuine influx of capital, which means that people will buy it up. Now, if that's not then sustainable because the rest of the market still looks like shit and then everything rolls over, what happens when everything really does roll over and markets go down? Well, Bitcoin's going to drop, a la March 2020. Bitcoin wasn't really in a kind of phase where it was going to have a collapse in early 2020. It was just a simple, the whole market was just so in panic and just had this complete and total liquidation that just meant everything was dropping until there was nothing left to drop. And crypto, if you get margin called, if you've got to pay someone, you will sell anything that you have in order to meet that margin call. And if people had crypto to sell and they were getting margin called on their stocks, which they were thinking, shit, I'm at risk of losing my pension here, bye Bitcoin, off you go.
Yep. Prioritization, right?
Yeah.
So I remember us talking about, now that we had that question, where it's like everything is kind of very much the evolution of technology has given you, you can see exact numbers, you can see all these things, right? And everything is kind of controlled by computers and all these things. I remember us a while back, Rob, we were talking about this, the Fed funds.
Yeah.
Right. Which is basically the interest rates. I guess you can almost call it that. But so you can see on the chart there. I can show you actually here. So you can see this is now, obviously, and back here is 1954, basically. And if you look at how the line is moving here, you see how it's very uneven and kind of jumpy and kind of sharp tops and all these things, right? And then when you get to like 1995, around where internet computers and stuff started existing, you had these. It was still kind of choppy like this, but then you have these almost perfectly straight lines, flat tops, straight lines, not really moving, and it's like here's like a staircase. You can almost see how they make a decision to do exact moves, because this is not something that happens now, and I don't know if that's why, but you can almost see technology taking over on this line.
But I think it's the because of the any large move which is unexpected ends up creating volatility, and we've seen the problems that has come from the markets continually hiking interest rates, and that's just the news, really. There is, as a fundamental event, there isn't any real fundamental reason why you should rush out to sell your Bitcoin just because the interest rate went up 0.5%. That logically there isn't a reason. However, it all goes back to the fact that if the interest rate is rising, if the federal funds rate is rising, then people can get higher interest rates on their bonds, which makes bonds inherently more valuable, even though they've had a horrific sell-off. But as they have their sell-off, the yield is getting higher and higher and higher. So as they're raising the interest rates, the yield's going higher and higher. That makes them better investments. And somebody who's a portfolio manager will go, if my average return on the S&P 500 is 8% a year, well, I can get 4% with zero risk. Okay, well now I need cheaper stocks to give me that higher expected return, because my stock portfolio is doing not as well as my bond portfolio. So that's the reason why it has this effect, is basically the risk-free cost of capital coming from the bond market, and that's directly tied to the federal funds rate.
Yep, precisely. And I don't know if you guys saw that line that I made there before, by the way, kind of falling into this, but here's the trend line we talked about. Yeah. that I talked about, where we haven't broken this trend line since 1989, but now we're exploding through it. For me, the way I'm looking at this and saying, okay, this is how far we got before basically a recession, right?
Well, you can if you could lay on the US recessions on top of that.
Yeah, I can actually. Here you go. So you can see how they they need to get inflation down, so they raise the interest rates basically, and then they realize, oh, wait a minute, things are
We
not going
overshot.
well, and then they try to hold it there to see what happens, and then they get, messed up. And there we have a
FMEA.
recession. There we have the recession. Then,
Zero
GDP
interest rates.
GDP growth here basically. We have to step it up again because inflation is going bad.
And that will
down.
no.
This
So that
is-
was
this is what's
2019. So
Yeah.
so the 2019 rises, the market really didn't like these rises. The
Yeah.
market was sort of saying, heading into an economic bit of a cool down, there was an awful lot of money tied up in the system that didn't really have anywhere to go, and these rate hikes in 2019 or 2018, 2019 were basically causing a whole load of havoc, because the everything was ready to break, and it was the COVID crash was a symptom of that. Everything was ready to break, and that was because they couldn't even raise interest rates to 2% without breaking things. And now we obviously printed our way out of that with huge financial stimulus, and now
we're paying the price.
And now those days of easy money are gone. And that's it. May be a complete 180-degree turn, and 6 months' time we're heading back to 0% rates. The data says that it's kind of inevitable. It does say that, but how long can they try and how long can they try and pretend that that's not the inevitable solution? Because it's a solution that comes with a whole load of problems.
Yeah, I wonder if we're gonna see something like I think the terminal rate was this. I can't remember what the terminal rate was, but I think we might be able to see one of those flattening things. And then
I would hope very soon.
I wonder if they can actually do something like this.
I think that's what they would. I think that's what they should be doing.
Yeah, and I mean, instead of going to 0 interest rates, if they can hold it at like 2,
I think
that would still
probably closer to 1.5. 1 to 1.5 is more likely.
Right, but
reality.
Still, this is more. Having interest rates at 0 is not. If it doesn't cost anything to borrow money, then you will have extreme spending, and GDP will grow. Companies will make a lot of money, and all these things, and people will just put themselves in debt and more in debt and more in debt. If there is at least some kind of cost to it, let's say 1.5%, then at least there is something there, kind of.
It's this is the
tricky part about it. It's like you can speculate as much as you want,
and this gives credence to the argument that sometimes economies need to have recessions. Now, okay, yes, that I'll accept the argument that much of this recession was caused by government actions, necessary in parts, maybe exuberant, not for us to say here in that it was spent the way it was spent. Here we are where we are, and now we're starting to see we're seeing the effects of that. And what's the solution? Well, the governments know the solution, but they also know it's hella unpopular, because it's a return back to is free money for everyone. What I don't believe that's what the target is, free money for everyone, but giving out, printing huge sums of money into the system, if it can make it into the financial system, which is a big problem for a lot of money, it can't get in the financial system, that's going to create inflation. It's going to create a whole lot of economic problems. And if we're not going to return to that, then we need to accept higher interest rates, potentially less growth, and all the bad things that comes with that. So it's a rock and a hard place. There's no easy way out.
Yeah.
Every single decision is kind of screwed at this point.
Yeah. I mean, and people can argue, oh, Bitcoin solves all of this, and it's like, not really.
Does it?
it depends on how it's implemented, right? I think we talked before about, the because right now we're in Keynesian economics, right? Uh, If we went over
Well,
directly, if we went straight into Austrian, that wouldn't really solve anything. But if there's a hybrid, maybe. But I think that's another discussion. I think
I would say
what we
we're
need,
in a hybrid. That we always have
yeah,
been in a hybrid, and what's happened is this decade of very low interest rates has essentially purposefully mispriced money as the commodity that it is, as the thing of value that it is, and because of that, the market has automatically responded in an Austrian way. It's gone out and bought assets. Apple stock is when Apple stock is a better store of value than the dollar, Apple stock is essentially it's gold. It's a commodity. It's got something. It's something with inherent value because it is a thing, and that can then be used as collateral, the same as cash can. So we always have a hybrid system, and to me, Bitcoin is simply a new entrant in that hybrid system, where it provides a set of superior monetary qualities, which will lead money to be allocated towards it, and that will continue to grow and grow and grow in waves. Now, in response to that, and how high it grows will depend on the inherent value of the fiat currency, and how, if a country operates a good fiscal policy, maintains their spending at a reasonable level, pays their debts, and offers a good yield on their cash, then yes, people will allocate capital to that currency. Now, that currency could be better than other currencies and would therefore attract more money into it, the same as Bitcoin will. So it's just a different tool, and it's a tool that has certain qualities which are Austrian, and cash, which does have Austrian qualities essentially in aspects, but it's also highly Keynesian. And Keynesian itself isn't necessarily a bad thing, because of how it's supposed to be implemented, is that you, as GDP grows, you increase the money supply to provide additional liquidity for the amount of transactions that are going to take place. The problem is that they discovered it works the other way around, that if you print the money, you get the GDP growth.
Yeah. Well, okay. So we for some reason we ended up talking about this. I don't know why. This is what Rob and I do. We just end up talking about stuff.
It's because we started talking about the stock market, and this is where we end up.
Sorry. But so what we were talking about was, how do we research various things to what are some of the stuff we look at, and we did talk about the daily active users and why we look at that. Is there something else that you look at, Rob, that you think is pretty important to understand around a project or
I think it's something to. I'd say yes. It's worth looking at for. Well, it's more for timing. I think now, like I'm kind of convinced enough in sort of Bitcoin and Ethereum, and go, okay, with Ethereum in particular, timing is maybe more important. Right now the user base is still declining. That's not bull market territory. That's still a bearish sentiment that the users are leaving. If you started to see Polygon continue to make higher highs in its user base, then clearly you would want to see how those charts then relate. And
right.
If Matic's growing while ETH is shrinking, that gives credence to the idea that Matic is a superior investment at this time.
Yeah, the question though is, with those metrics, does that mean that there's no real way for us to look at ETH versus Matic, for example, in adoption, when one is going up and one is going down? Does that mean that people are going from Ethereum to Matic instead? Or does that mean that people are just getting out of Ethereum, going into something else, and then new people that get into the market get into Polygon? Right? We don't really know how to look at that.
But overall, what's the difference? It's still user base.
Exactly. It doesn't matter. But it's nice to actually have that thought, so that when you're looking at these things. So, Rob, if I told you to go find me a good L2 investment or L1 investment, except for the ones that we're already in ourselves, what would you start? Where would you start? That's the difficult part, right?
And this, okay, so for starters, what I want to see, and this might sound like blasphemy, but
Oh no, what's coming now?
look at the projects that the influencers are talking about. So look at the ones that are gaining attention now. And I'll say straight away, I was laughing along with everybody else at Shiba when it came out. Doge, I owned some Doge. I owned 300,000 Doge at the start of 2021, and that was about $250,000 at the top. And I think I sold it for a small. It had like a 50-100% pump, and I just went,
"Oh, nice, profit."
Double my money on it, and missed 400x or something.
I like that you're still sad about it too.
Of course, I'm sad about it. How can you not be sad about it?
Have a hug.
But that was, for people, a lot of people were just laughing at Doge, at Shiba, and look at the tokenomics, look at it's ridiculous. These are stupid investments. They're all going to zero. And okay, yeah, they've dropped an awful lot, but they're a hell of a lot higher than they were 2 years ago, and that is a step change in adoption. And all those people who were talking about buy Doge, Doge is going to be really good, Doge is going to change the world, and you start seeing that, if it's not sort of bull market euphoria, we're up at hundreds of thousands of dollars per Bitcoin and everything's amazing and we're going to change the world again. This was like bear market stuff. Everyone just started talking about Dogecoin, and so if you follow that, that's a hell of a good place to start. Are people actually interested in the thing that you want to own?
Yeah, exactly.
And on-chain metrics are a way of backing up that data that you can gain yourself, essentially, just by seeing who's talking about what in the market.
So I actually found
Google Trends is obviously a good one for that.
Yeah, I actually found daily active addresses on Dogecoin here as well.
Go on.
And it is, what color is that? Okay, let's share this. It is this line right here. So It's actually more people using Doge than XRP.
Yeah.
So I don't know if you saw my face there. I was like,
yeah,
but that's just the reality of it.
Yeah,
it's just because something is ridiculous doesn't mean that it's a bad investment, and just because something is amazing doesn't mean that it's a good investment either.
If you look at Doge, how consistent its user base has really been.
That was my next point.
Yeah,
yeah, you can see how it's in an uptrend. Not much of an uptrend, but it's very stable. It's one of those. This for me tells me it's community driven. If you have a consistent user base of 50,000 people, let's say, that's still 50,000 people that are willing to trade the token and all these things. But if it's not, like, when I invest in, and this is the time preference thing that we talked about before, right? Whoops, I don't know what I pressed there, but it was the wrong button. But for me, I look at long term, right? So for me, it's pretty easy to find what I want to be in. I look for something that has a growing network, a growing user base, like I said, like the network. When I say grow network, I mean applications are being built all the time on there, and people are using them, and all these things. I look for that when it comes to smart contract platforms. Mainly, that's one of the first things. If it's not there, it's like, okay, no point bothering with looking at the other stuff, because it takes a lot of time to look at these things.
Yeah.
But if you're just looking at, I want to make a quick buck, if some influencer somewhere, like one of the, I want to say there are serious influencers and there are money grab influencers out there. The more serious ones are some of the bigger people on YouTube, like Coin Bureau, right? They're an influencer. Obviously, you got over 2 million people following them, but they make serious content. They don't just say, "Oh, buy this thing." No,
They say these are the facts. These are the facts and the figures behind this. And
precisely. So there
make your
there
own
are
mind from there.
so there are a handful of people that I personally follow on YouTube that I believe are serious people, right? And that's actually one of the things, something you should think about too when you're looking at YouTube and who to listen to. First of all, don't listen to anyone. If somebody tells you, "Oh, go buy this thing," run the other way.
Listen to everyone and listen to no one.
Yes, so listen to yourself mainly. But what I'm trying to say is, if you are looking for someone to give you good information, it is not that difficult to find that on YouTube. If you just understand that some people say, "Hey, go buy this coin," probably not a good idea. If somebody is giving you this type of data, when they're showing you how to look at this and why you should look at this and all these things, I'm not trying to like put myself on a pedestal here, but there are serious people and there are shillers out there. Unfortunately, many of the shillers are found before the serious people are, for some reason. But just for me, like I said, if I'm long term, it's easier for me because I can research things properly before I make a decision, instead of hunting for something that is currently in a big explosion uptrend thing on TradingView or on Binance. If I just, they're gonna list it. Example, I remember when Coinbase listed Kronos, which is Crypto.com's own token or coin, that on the day or in the coming 3 weeks, it went up like 1,000%, I believe.
Yeah.
In 3 weeks or something like that, just because it was listed on Coinbase, and then it came falling down. So if you want to take the risk and you know that something is going to get listed on Coinbase, I don't know, put something in it. But
the fun thing with that though is that Coinbase pumps mean an awful lot in a bull market and absolutely nothing in a bear market. Like I've seen stuff list on Coinbase and just collapse in bear markets. So the overall, when the sentiment is up and something gets listed, that can be a catalyst on itself. If it's listed in other places,
even if it's a shitcoin, it doesn't really matter. Like if the overall market's sentiment is bull market, right? Something is listed on a big exchange like Binance, Kraken, Coinbase, whatever, it probably will pump, because suddenly the people that are using Coinbase or Kraken or Binance only, they will have access to buy this token, and they will be like, okay, boom, maybe. During bear markets, no, not really. People are trying to stay in their safe assets, and they are trying to kind of, run the bear market, sort of. But yeah, there are things to look at out there, and this is just one of them. Like, daily active users or addresses is one thing. And like I said, there's many more. And I think, Rob, we will try to record a bunch of videos. I'm currently trying to learn a software to record videos properly and make them look nice. But we will be creating, let's see, what was it? A whole series on TA. Everybody knows about that already because we already voted that in on Twitter. The next one should be like fundamental analysis, which is a lot. Then it's on chain, I believe, and that's this stuff that we were talking about here. And then it's the macro perspective, which is kind of what we always lean into. So watching this show means that you're going to get some talk about stuff and some Bitcoin talk and all these things, but we usually fall into the macro perspective because ultimately both Rob and myself are macro perspective investors. At the end of the day, we'll look at the whole picture, zoom out as far as you can. We're on the monthly chart, while other people are sitting on the 4-hourly chart and 1 minute chart and hourly chart and trading. We are on the monthly chart, just looking at, okay, in 2 years, I might want to buy this. It sounds kind of boring, I know, but it gives you a very broad understanding. So keep your eyes peeled for us uploading all these educational videos on those 4 big things. It should be good. Yeah.
For sure.
We did actually have a question from John. John Benjamin. He says, how much do you think was traded via AI or bots last year? A lot.
$100 billion.
Oh. Yes.
Yeah,
You need a cat.
a lot. Most of it, I would say, for sure, most of it. When you look at,
I think most liquidity that's popping around back and forth on most exchanges are probably using anything from grid bots to strategy bots and all these things. I personally use bots. Rob, you use bots too. It is just if we can segue into kind of bot usage here, it's you're the expert here, Rob, for the strategy ones. But I'll say this though, the nice thing about bots is that if it's a strategy bot that Rob uses, he can put his own brain into the bot or his own strategy into a bot that will do it for him all of the time, instead of sitting there letting emotions take over where it's like, oh, should I buy now, data? You make up your own strategy and you program a bot to do it, and then the bot just does it for you, basically. So it's one of those things where it's just not so much for the sake of making more money, but it's more like wealth preservation / execution.
Downside protection is that was the main reason why I had them. That I had something that would take as part of my portfolio, and if the market turned to shit, I would be out. And I was out in a way that I had programmed myself. It's my strategy. I knew how it works. I can, if it goes bad, it's on me. There's no one else that I can blame for. In the same way as manual traders, if you make a bad trade, then you've got to own it. I'm comfortable with that my strategy will work, and if it's quite interesting because I by no means have a gigantic portfolio, but the amount of money I traded last year was orders of magnitude more than my portfolio size. So for somebody who doesn't make many trades, or there's just an occasional buy, and that kind of manual investing type way, compared to the amount of volume you can push through in a bot, it's incomparable. Because manually, you're not going to sit and make trades necessarily of that frequency. Some people do. Some people will sit and manually trade billions.
Yeah, there are day traders out there.
Yeah, but
for sure.
For sure, the majority was traded via bots. The AI applications of that, I don't know enough about yet, but it's certainly an area of interest for me.
Well, we're not going to say a lot, but we may or may not be working with some people. But
that's saying absolutely nothing, sir. But yeah, we'll leave it at
that. I'm just leaving it as a mysterious question mark for everybody to keep an eye on us. But yeah, like I said, doing like a grid trading bot, which is what I usually use because I'm lazy and I don't have the know-how how to code a good bot. Rob is helping me to put my brain into a bot.
Hey, we've done one. It works.
We've done when it works, and it was like, I don't remember the percentage over time what it was, but it was not horrible. It was very good. And like I said, it's more of a it takes away, it saves you a lot of time and a lot of heartache, because sitting like for me, this is why I'm a long-term person. I'm more of an accumulator, right? I wait for a bear market, and then I want to accumulate during the phases, and then I will let it ride, and then I will try to sell somewhere around the bot. That's my brain, right?
Yeah.
The bot will do better than that. It will, even in a downtrend, it will do all the things that my brain would do, but without me sitting here worrying about, oh, should I really buy now or should I wait? Like, it doesn't matter how much experience you have in trading, you're going to be nervous at some point. Or you're going to be FOMOing at some point.
I'll tell you what, here you go. You can actually put my screen up for a second, and you can see your strategy.
Oh, is that my strategy? Oh,
that's
okay.
yours. Yeah.
Hey, Hey, don't laugh at my
So,
strategy, guys.
well, no, but that's so. This is kind of the trade-off of strategies that you can, is that this one is very good at finding tops. Ultimately, many of these tops can be local tops and the continuation. So if you went and sold everything there, well, then you miss out on the entire bull run. However, if you would have sold an increment at each of these sections,
Yep.
you'd have had an opportunity to buy back significantly cheaper. You'd have then
Yep.
sold the next two peaks right at the peak and
Yep.
then been able to accumulate back lower. So as a risk management tool, as a way of saying I'm going to lock in gains and lock in profits and then reallocate lower down, or reallocate when the bot says this is now a good time to allocate.
Right.
If programmed and executed properly, then yes, they can save quite a bit of money. And at some point, I would like to be able to start making these available.
Yeah. No, I guess if you guys want, viewers, if you want to see how maybe this strategy works, maybe we can make a video on it in the future and put it on the Patreon, and just kind of show you how to what it is doing and how the strategy is kind of laid out. You can still use a strategy without without it being a bot, right? So if I can write down my own strategy on paper and I can make a video about it, and then you can try that out if you want. And Rob has his own. I think Rob has several strategies actually.
Oh, I have a whole host of them.
Yeah, right. Depending on what kind of asset it is and all these things, but essentially for you as a viewer, if you're into trading and all these things, what you need to do or should be doing, according to most experienced traders, is that you create a strategy, you put it on paper. When do I want to buy? When do I want to sell? And all these things, you put it down on paper, you figure out which indicators you want to be looking at, and then you follow your own strategy. Like if you don't follow the strategy, if you don't execute your own strategy, then maybe you can try that as a bot, but then you have to know how to program that. So, but yeah, having a strategy is key, because if you don't, you're kind of just swinging in the dark almost.
Yeah. So here's my strategy up.
Let me open it. There we go.
So I don't use it on its own because it can kind of buy some sort of local top. So what I do is I always say that when this has got two swing trading strategies in them that counter, they work together and they look to see how bullish the market is, and then they've got a tiered list of conditions that to be true in order to buy. So it's not set out to buy bottoms and tops like yours is. Mine's set to scale into positions as the market starts to turn. And so you can see during like bear market periods, you can get fake out trades where it doesn't really make that much money. On many of them, you still had sort of some opportunities to take profit, and you still had opportunities to buy down lower. So overall, again, it's if I use this on different time frames and with different sets of filters, and so that gives me a whole range of I can scale in and scale out with, say, 16 strategies all working cohesively, and that allows for a much smoother buying and selling experience for me personally. Obviously, people need to use bots at their own risk, but be aware of they can offer an alternative way of trading. It's not necessarily that you're going to make 100,000%, but if for many markets that move, say 10,000%, the chances of you manually timing the bottom and timing the top and being able to capture that 10,000% are minuscule to none. So from something that moves 10,000%, you should kind of look and go, if I can make 3,000% here while being incredibly risk averse and managing my downside at multiple steps of the way using both automated and sort of manual analysis tools, then you're probably going to end up ahead of the game compared to somebody who isn't using those tools and is simply winging it as they go along.
Yeah. And like, if you're kind of a beginner to this whole thing with trading and everything, or investing overall, usually I say as a beginner, I take it very slowly. I look at like the daily to weekly charts. I take it very slow. I try to learn like where's the bottom for a longer term period, and all these things. And, being aware that you're a beginner and you're looking at a zoomed out chart of a daily to weekly kind of perspective, that gives you the opportunity to you have the time to learn a lot more during the time you're waiting in between when you bought and when you're preparing to sell. It's a very steep learning curve to all of this, but it's not that difficult. Just be on it, learn more. Because if you make a buy somewhere and then if you're zoomed out to the weekly and you're thinking like, okay, we bought a weekly bottom here, and the last time it had a weekly bottom, it took 36 weeks before it was topping out again, then you have basically, well, I'm not going to say you have 36 weeks, but it's certainly more than 3 hours.
Yeah.
Before you should probably think about buying and selling. And it takes a lot of the nerves out of it too.
There's the kind of just as a rule, never buy a green candle. Yeah. Never buy a green candle. Well, so if you see a breakout, wait for a short-term pullback. Don't buy before on FOMO just because something's spiking up, because look at the past year and see how many of these spikes have been faded. Every single time, every single drop, lower low, lower low, lower low, and these pumps get weaker and they get sold off quicker. And while while markets do remain in bearish territory, potentially trying to turn around, but not by no means out of the woods, then it's something just values are still for selling. And if you can make that a good habit where you only sell green candles and you only buy red candles.
Yeah. And on top of that, I think getting into strategy bot trading when you're fairly new to this, even if you've been in the market for a while, but let's say you're an NFT trader or something like that, it's entirely different to being like a crypto coin trader or token trader.
Yeah, very
it's different. A different thing. It's a very different thing. There's a whole lot of other metrics to look at, but either way, like if you really want to try to get into this stuff and learning TA and everything, keep watching us. And also, if you really want to get into like bot trading, I think getting into strategy trading is probably not great, because your first strategy, if you're not talking to somebody with a lot of experience in it, will probably be kind of shit. With respect, it usually is. But
it pays to back test and pays to really take your time with it. Mine took a couple of years until I was happy to really deploy it on scale.
Right. And I was happy with mine because I had already worked with my own way of investing before I even asked Rob to help me put something together, and he made it better. I know Plippy came in and added 2 things to it. I think two more things to it that made it even better. So it's like one of those things where you can build it over time, of course. But what I wanted to say was that if you want to get into bot trading and try bot trading out, grid bots are actually not bad. What they do is that they put up hundreds of grids or hundreds of buy and sell orders, limit orders, across like a range of a price that you might want to trade between, let's say Bitcoin between 20 and 25K, and it will put in, let's say, 100 buy and sell orders between there. So once it goes up in price, it will sell off some of the Bitcoin you have, and then where that was, it will create a buy back order. So when it goes up and down all the time like that, it makes a small amount of profits between those grids over time. And you're not going to make hundreds of millions of dollars or thousands and thousands of % with that, but it's a way that the longer a grid bot runs over a longer time frame, the more releasable profits it will make. And eventually, let's say you get in at 20K or let's say you started it at Bitcoin when it was 30K, and you put the price between 10 and 100K or whatever. You put in 1,000 grids in there and $1,000. Eventually, when it's traded through those grids for long enough, eventually your cost basis that was 30K when you started it will come down and end up being lower than your lowest grid, which means that wherever you stop this bot inside these grids, you will make a profit. So that's one of those security things that I like about the grid bots, is that if you put in the right range on it, which is very simple to do on Pionex. We have a link down there, by the way, for that if you want to check that out. But it's a very nice way to kind of think long term. For personally, I'm accumulating Solana right now, for example, and Ethereum and Bitcoin, all these things. And my plan is I'm accumulating it now, and then once we get to the old all-time high of Solana and Ethereum and all these things, that's where I will start my grid, and I will pull it up to where I think the next all-time high will be. So my grid bot will start selling off and buying back all the way up through the entire next cycle until it comes down again. And then hopefully I'll stop the bot before it goes too far down. But at that point, I'll have hopefully a 2-year run of that bot just trading back and forth, kicking out some profits that I can use for the next bear market, basically. So that's my personal plan for my grid bots. And I kind of like that plan, to be honest. I think it sounds pretty good. So yes, grid bots can be really good too, but ultimately I think strategy bots are probably a bit better.
It's something that you can, there's no reason why you can't use both. Use multiple strategies. Have a hodl pot, have a pot which you do manually trade, have a pot which is in, say, grid bots, have a pot which is in strategy bots. You don't have to have go all in and all out. And it's a big thing that people in trading think that when you see traders go and I've made 400%, they're not talking about their portfolio size. They're talking about 400% of a certain allocation which they put into a trade. So if that allocation was, say, 5%, and they say they've made 400%, well, they haven't. They've made a much smaller percentage. They might have made 400% on one trade, buy and sell price, but it's a fraction of the portfolio. Remember that. It's not these people. Some people may go degen long all in one coin, and that's just
can't say I haven't done that.
It's just going to the casino. If it's if you're doing it on something stupid, if you do have a long-term vision, then and long-term basis, then yeah. But if people leverage trading on absolute crap, then you're eventually going to get burned.
Yeah. Well, with all that said, I think we need to start wrapping up soon. Actually, I know, Rob, you got to get going, and I feel like we've talked about a lot of great things today. I like that we slid into the bot trading too. But yeah, so everybody who is here and who is watching after this live is over, thanks for coming. And make sure you subscribe. Make sure you hit that notification bell and all that stuff, and leave a like if you like the video and all that. But with that, I think we're ending it here, right?
Yeah.
Unless you want to sing a song to end it.
Take it away.
No, thanks. All right, everybody. We'll see you on Monday for TA. Right? Cheers.